Guys, if you are thinking about buying or selling a condo, there is a very important change happening in mortgage lending that you should know about. Because when you finance a condo, the lender is looking at more than just whether you personally qualify for the condo. They're also looking at the condo association. Does the association have enough money saved? Is it properly maintaining the building? Are there major repairs coming? Does it have adequate insurance? Is there a realistic financial plan for maintaining the property in the future? That means that you could have excellent credit, great income, a solid down payment, and you could still run into financing issues because of the association itself. And some lending changes that are happening in 2026 and 2027 are making this even more important. So why are lenders looking more closely at condo associations right now? Well, the Surfside collapse in Florida back in 2021 was a major impetus for these changes, but the basic principle is pretty simple. Imagine a condo association collects just enough money every month to pay its immediate bills. Everyone loves it because the condo fees are very low, but the association isn't saving much money. And eventually, the roof needs to be replaced, the siding needs major work, the parking lot needs to be redone, or there are major structural or mechanical repairs needed. If the association doesn't have enough money saved, then every owner is going to be hit with a major special assessment. Now, that is the type of financial risk that these lenders are increasingly paying attention to. So Fannie Mae and Freddie Mac, which influence a huge portion of conventional mortgage lending, have tightened some of the standards that lenders use when they are evaluating these condo associations. One of the biggest changes involves the reserves. Now, the condo reserves are essentially a savings account for the condo's future repairs or major expenses. Right now, condo associations are generally expected to set aside about 10% of what they collect from their owners each year towards those condo reserves. Beginning in January 2027, that standard is going to be increasing from 10% to 15%. Now, that doesn't sound like a huge difference, but that is a 50% increase in the minimum reserve contribution. And for condo associations that have purposely kept their fees low and haven't set that much money aside, that could mean some serious changes are coming in the future. I do want to make a distinction that is especially important here in the Boston area, where we have a lot of these converted 2 and 3 family buildings. Basically, these new reserve requirements generally don't apply to you in the same way. Now, those are smaller associations. They can qualify for an exemption from the more extensive condo reviews, and you'll still need to pay attention to things like the building's insurance, serious maintenance concerns, and what's actually in the reserve funds. But I don't want you to hear the word, 15% in reserves and suddenly feel like you have to completely restructure the financing of the entire condo association if you're in one of these smaller 2 to 4 unit buildings. For larger condo associations, however, these reserve changes become much more important. Now, in a minute, I'm going to get into how all of this impacts buyers, sellers, trustees, but first I want to address a term that a lot of condo owners and condo buyers are going to start hearing a little bit more often, and that term is a reserve study. Think of this as a long-term financial roadmap for the property. The association hires a qualified professional, often an engineering or reserve study firm, to evaluate the major components of the property. They might look at things like the roof, the siding, the pavement, elevators, common mechanical systems, or other major components. So these firms go in and evaluate how long these components should last, when they're going to have to be repaired or replaced, how much those repairs or replacements are actually going to cost. And then they're going to go in and make sure that the association is allocating the proper funds to actually make those repairs when the time comes. So if a lender is actually relying on these reserve studies, you can bet they're looking very closely at what the condo association is actually budgeting to make sure they can actually afford those repairs when the time comes. So it's really becoming much harder for these associations to keep their savings low for the sole purpose of keeping the monthly condo fees down. Quick note about insurance. This is another piece of the equation, regardless of the size of the condo association. The association generally carries a master insurance policy, and that's going to cover the building and all of the common areas. And that coverage basically needs to satisfy certain lender requirements. If it doesn't satisfy those lender requirements, that can basically create a financing issue for the buyer of that condo. So we don't need to get overly technical here. The important thing is these condo owners and trustees, they basically just need to make sure that they have the appropriate coverage and have the proper documentation ready when those lenders request the insurance documents. So what does this mean if you are buying a condo? Well, you're not just evaluating the condo, the unit itself. You're also evaluating the condo association. It is equally as important. So there are a handful of questions that you want to make sure get answered. If not before you make an offer, then definitely during your due diligence period. How much does the condo association have in reserves? Are there any current or upcoming special assessments? Are there major repairs being discussed? Are there known structural or maintenance issues? Does the association have appropriate master insurance? And for larger associations, is there a reserve study or long-term plan for major expenses? Remember, if you're buying into one of these 2 to 4 unit associations, the reserve requirements do not apply in the same way, but you should still care about that financial health of the association. You're not just buying into your unit, you are buying into the financial responsibility for the entire condo complex. And sometimes slightly higher fees in a well-funded association can carry less risk than extremely low fees in an association that has almost nothing saved. So what does this mean if you are actually selling a condo? Well, it's pretty simple. You want to identify these major potential financing problems before you put the condo on the market and not after you have accepted an offer. So before listing your condo, you want to gather some information: the association's current budget and financials, the master insurance information, current or upcoming special assessments, recent meeting minutes, any existing engineering or reserve studies, and information about major planned or ongoing repairs. Now, despite the different requirements for these smaller complexes, these 2 to 4 unit buildings, the master insurance issues, special assessments, reserves, missing documentation, these can all still create headaches in the eyes of the buyer and their lenders. And for these larger complexes, the reserves and the overall financial health of the condo complexes is becoming much more important in the eyes of these lenders. And if one buyer's lender identifies a major legitimate problem with an association and that buyer walks away, there is a great chance that the next financed buyer is going to run into these same issues. So this can ultimately impact the buyer pool and the marketability of not just that one individual condo, but every other condo in the complex. So just make sure you're getting all of this information ahead of time. You do not want to run into these problems after you've accepted an offer. I also want to make a quick note for the condo trustees out there, the people that are running these condo associations. You want to just focus on making sure all of this information is well organized, easy to get to, and easy to share with the current owners in the association, buyers who are going to be looking at properties there, and those buyers' lenders. So please make sure this information is just organized and ready to access. There's nothing worse than a condo association that makes it really difficult for the owners to actually convey that property. And also, when buyers are making offers on the properties and they're seeing how difficult it is to get information, they're thinking to themselves, okay, if I have to sell in 2 to 5 years, this sales process looks like it's going to be a nightmare for me on the selling side based on the speed bumps that I'm running into here as a buyer. So just keep that in mind. If you're making this process easy for the owners and the incoming buyers, those buyers are going to be able to make more confident offers, and it means your condos in the association are going to sell for a higher price more quickly when compared to other condo associations that might not have their ducks in a row. So the big takeaway here is this: when you are financing a condo purchase, you're not just buying into that unit, you're also buying into that association. So for you buyers, make sure you're understanding the condo association that you are buying into. For condo sellers, make sure you are finding out all of the information you can ahead of going on the market. And for the trustees out there, just make sure you're not creating any unnecessary financial obstacles for the owners of the association. Guys, guys, if you are considering buying or selling a condo anywhere in the greater Boston area and you need some help understanding what you should be looking for, feel free to reach out and connect with our team. We are the Rivers Group at Compass Real Estate. We help people purchase and sell condos and single family homes all over the greater Boston area. So if you need some assistance, you're really not sure how to go about the process, feel free to reach out and have a conversation with us. And we're happy to also connect you to some insurance people, attorneys, lenders, any other resources you need to help make sure all of your questions are answered and you can move forward confidently with your condo sale or purchase. So in the meantime, thank you guys so much for watching this video. Hopefully you got something out of it, and we'll see you on the next one. Take care.